This is your destiny also, to become that transparency as the crust of identification with mental objects breaks up, dissolves, something shines through. And so in many of you, you already bring, as you go out into the world, you bring peace into situations simply by being there, by not stepping out of the old reactive consciousness.
January 12th, 2026. We're going to go over how many times the strategy came into effect today, and then we're going to go over the trades that I took. The strategy I developed is specifically for NQ or TQQQ, since they mirror each other, but it can be used for other ticker symbols as well that are in play with high volume, good volatility. First, we are going to look at the daily momentum indicator. So our daily momentum indicator is telling us that we have an upward bias. Before the day even started, before the market even opened, we had a visualization of upward momentum that was building. So we had an upward bias. We also used the 2-hour and then we used the 30-minute charts to gauge our higher time frame bias. But the strategy we're going over today is specifically just the 5-minute and the 2-minute synergy together, as the win rate is pretty good. The first thing we wait for is for the 5-minute twins to become in harmony. And by that I mean the 5-minute regular hours and the 5-minute extended hours need to be showing the same results with regards to momentum. At market open, in the first candle, we're seeing a 5-minute extended going up, and we're seeing a 5-minute regular going down. These are not in harmony. So the strategy doesn't come into effect until these are in harmony. So what happens here? We've stopped going down on the 5-minute regular. We're now going up on the 5-minute regular. We're starting to retrace back to the middle point, which is a critical zone. And by this time, the 5-minute extended is still in upper territory, and remember, we've got an upward bias with regards to the daily momentum. But it's starting to die off now. The histogram is starting to die off, but in very high territory. And then the 30-minute larger current is going up. So we've got signs pointing up on many fronts. So the 5-minute regular hours is more important than the 5-minute extended hours. So the 5-minute regular takes priority. Right here, I started to want to take trades to the downside, as you can see by these vertical lines above, meaning we're expecting it to go down. And if there was a vertical line below, we're expecting it to go up. And right here, what do we see? We see this about to cross over to the downside, and we see this now losing power to the downside, but we didn't take the trade because this is not clean. We want it to be clean and obvious. That's the strategy. We don't want any ambiguity. This is very ambiguous. So we didn't take these trades. But look what happens right here. This is painful because I didn't act on this trade. Otherwise, this would be yellow instead of purple. I didn't take this trade, unfortunately. I missed this trade. This was my responsibility. This was my job to capture this trade, and I didn't. Why is this my responsibility? The 5-minute regular hours is now building up. Okay, do you see this? Right here. We're now going up. The 5-minute extended was not aligned yet. But I shouldn't have let that sway my judgment, because I knew that the 30-minute was going strong in the upward direction, and I knew that our daily momentum was in the upward direction as well. So I should have taken this trade, and I didn't. I didn't take any trades in TQQQ today, unfortunately. I traded NVIDIA, and we will go over those. But this was the strategy right here. This was the entry point right here. We have a volume confluence, a volume bar greater than the previous 3. We're on the right side of the 2-minute momentum. Our 5-minute now has permission. Had we waited a little bit later, we would have had upward momentum clearly on the 5-minute extended right here. It starts to happen. See that? Now we're going up. Now we're ticking to the upside, almost at the crossover point. That's why I marked this one as well, because this was yet again another valid entry. Power volume bar on the right side of the V. We're now going up on both the 5-minute charts. I didn't take any of these trades, unfortunately. We also had a quadruple level, meaning previous week's highs were these purple lines, and then the red and pink were pre-market highs and yesterday's highs last Friday. So we had all 4 of these levels in a very tight region. And look how the price action bounced and played around with these liquidity levels. I put a what do you know here because of how, this is just crazy how, you could say it's coincidence, but this is a pre-market level. This is a critical level right here where there's a lot of buy and sell orders. So it's pretty interesting to see the price action just bounce right off of it, The last setup of the day that was unfortunately missed by myself is this one right here. What do we see? We are on the right side of the 2-minute momentum. We get a volume confluence, which is a volume bar greater than the previous 3. And our 5-minute data is well in the permission side of things. It's telling us, hey, we're going down. The entry would have been right here at the close of this candle, where this red line is. Stop loss slightly above that candle, targeting a 2-to-1 and allowing runners to run further. So with all that being said, our strategy came into effect technically 3 times today. All 3 were wins, and I captured none of them, which is why I feel bad about it. Now we're going to go on to the trades that I did take today. The first one was right here in NVIDIA. As you know, I trust NVIDIA a lot right now, and you'll see why here in a second. Our 5-minute regular hours is now building momentum to the downside. Look at this reversal. It's starting to reverse direction. Okay. 5-minute extended hours is flipping over to the downside. So this is really good permission to take short trades. Now right here, what do we get? We're on the right side of the 2-minute momentum. Building, 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 and then right here on this candle, we get a volume confluence, which is a volume bar greater than the previous 3. So I entered the trade here at the close of this candle, put my stop loss slightly above that candle, targeting a 2-to-1 for my initial profit target and allowing the rest to keep on going so I can take more and more profit. That was a win. These were other opportunities to the upside with the same logic. Volume confluence, right side of the momentum, with a 5-minute permission. These would have resulted in massive profits that I missed out on. I didn't take these trades, unfortunately. At least my strategy works though. And then the final trade of the day happened right here. I forgot to mark it, and I'll mark that now. So why did I take this trade? The 5-minute is heavy to the downside, and we haven't broken the previous variance level yet, which is this bar right here. We have not broken that level yet. The MACD histogram is holding, meaning that the selling pressure, the selling momentum is continuing. At this very point, at this bar right here in this point of time, that's what the information we've been given. We get a nice pop down to the downside right here on this histogram bar, and then we get a volume confluence. So we enter the trade, close of the candle on this yellow line, took profit at 2-to-1 and allowed the rest to keep on running for greater profits. I appreciate you clicking on the video. I will see you in the next one.